One of the most confusing topics for people in their financial lives is the use of insurance, and in particular, permanent insurance. An example of which I'm going to talk about today is whole life, and I'm going to explain it very basically because I think there's a lot of hand waving and confusion, and people get very easily tricked around how whole life works and how it doesn't work. So here's how it works. You pay money. Every month, you pay a certain amount of money to the insurance company. You put the money in like it's putting money in a piggy bank. Number two, it lasts your whole life. Unlike other types of insurance, your whole life insurance will last your entire life. No matter how old you get, the insurance will stay in place as long as you keep paying. Allegedly, it builds money over time. Number three, some of the money you pay doesn't just sit there, it grows like a plant called cash value. So after many, many years, your piggy bank, the insurance policy, has more money in it than you put in. And when and if you die, likely at some point, maybe, your family gets the money. When you pass away, your family gets the money from your policy, and this will help them pay for whatever it is that you want them to pay for. In short, whole life is a way to save money for the future while also making sure your family gets money if something happens to you. Okay, so now let me explain to you, conversely, the top five problems with whole life and why I'm not a fan of whole life. Okay. Number one, it's really expensive. Whole life insurance costs a lot more money than other types of insurance, like term life. It's like buying a super fancy overpriced car when you really could just go get like a Toyota, right? It's oftentimes not worth the price you're paying. Okay. You'll have to pay a lot of money each month for it. And also that can be hard to keep up with. And if you don't pay that money, the cost of the premiums will get taken out from your cash value in a lot of cases. Okay. Takes time to grow the cash. Number two, it takes time to grow that cash. Most insurance companies are sucky investment companies. Okay. They're not there to manage money. They're there to provide insurance. So as such, the cash value part of the insurance policy takes a very long time to build up. And at first, you're mostly paying for the insurance itself. The cash value grows slowly. So it's sort of like putting money in the piggy bank and only seeing it change a little bit after a long, long time, or even dropping in value and then coming back, maybe. Let's just say this. If you're using this as an investment vehicle, just don't. Okay. It's not meant to be an investment vehicle. Okay. Number three, another reason why I don't like whole life, you can't use the money right away. Even though whole life builds cash value, you can't use that money right away. It's not easy to do that. If you want to take out a loan against it or cash it in, it can be tricky. It's like having a piggy bank, but somebody else gets to decide how and when you break open the piggy bank. Okay. Number four, this is very hard to change. Whole life insurance, once you buy it, it's really tough to change it. So if your situation changes, like you get a new job or you don't need as much insurance, you can't just like swap it out for something else. It's like being stuck with a super big backpack when you really only need a small one. And ultimately, the money, number five, the money is not probably growing fast enough. The cash value of a whole life policy, and I already said this, but I'm going to say it a different way to make sure it's well understood. It doesn't grow as fast as you might want it to. Okay. Most people need to put their money to work. If you are super, super wealthy, if you're Bill Gates, you're Jeff Bezos, whatever, you may not need to put all your money to work particularly well. And maybe you want to buy whole life. Who knows why you do that? You could self insure at that money level, but whatever. It's sort of like planting a tree. You're waiting for it to grow. You're watching the tree. It's not growing. It's taking forever. It's like literally like watching grass grow or a tree grow. It just takes forever. If you're hoping for a lot of money in the future, this is not the play. Okay. You hear all kinds of stuff on the internet about, you could become a self-funded bank with, a form of whole life, blah, blah, blah. Don't buy it, please. Nothing worse than a young person showing up to me with a crappy whole life policy that some broker talked them into where they paid a ton of money for in commissions. And they're like, well, you're building your future. No, there are a million other ways to do things tax efficiently with better returns and buying insurance. There's a ton of ways to do this. The only time I like whole life is if you have a highly illiquid, high value estate. That's the only time I like it. because then it could pay for things when you're trying to liquidate assets. Okay. So, yeah, it has some estate planning utility, but if you have a lot of money that is available with high degree of liquidity, why would you need a whole life policy? Your family could just get the money, right? So, anyway, those are the top 5 features of whole life and the top 5 reasons why I really dislike whole life. I'm Jennifer Kirby from Talisman Wealth Advisors, and I'm here to provide you some free insights on money, financial planning, and all matters related therein. If you like what I have to say, please be sure to like, to share, to comment, or subscribe. Thanks.